This is a Forex Preview. Thank you for joining us at xam.com. The Fed's preferred inflation metric, the core PCE price index for February, is coming up on Friday. But could the data change the market's narrative for their projected Fed funds futures? I'm Cristina Marujos. With me today is our senior investment analyst, Haralambos Pissouros. Haralambos, investors are pricing in rate cuts by the end of this year, despite Fed Chair Powell clearly pushing against that perception last week. But could the PCE inflation data coming up this week tip the scales on this matter?
Hello, Christina. Yes, investors are pricing in rate cuts by the end of the year, despite Powell pushing against them. But what may have prompted them to maintain such bets may have been the change in the forward guidance. The guidance was changed to some additional firming may be appropriate. Perhaps the word may was seen as opening the door to a pause as soon as at the upcoming decision in May. Indeed, apart from a series of rate cuts for this year, investors are also evenly split between another 25 basis points hike and no action at all for the May decision. Now, the core PCE rate is forecast to have held steady at 4.7% year over year, but with the core PCE index for February slowing further, the risks surrounding the PCE index may be tilted a bit to the downside. So a downside surprise may add extra credence to the market's view. With the PCE numbers, we also get the personal income and spending data for the month. Both income and spending are forecast to have slowed notably, but with retail sales sliding during the month, the risks surrounding spending may be tilted to the downside. A potential slowdown in income is supported by a slowdown in the monthly average hourly earnings. Now, other data during the week include the pending home sales for February today, and tomorrow we get the final GDP for the fourth quarter. But apart from the data, Fed expectations could also be affected by speeches from a couple of Fed officials. On Thursday, we will hear from Richmond Fed President Thomas Barkin, while on Friday, after the PCE numbers, New York Fed President John Williams will speak. It will be interesting to see whether they will also push against rate cut bets, but also whether the market will believe them.
That will be absolutely interesting, Haralambos. But let's turn to the market reaction now. How could the dollar perform this week?
A slowdown in the core PCE and even the slightest hint from Fed officials that they could consider cutting rates at some point this year could weigh on treasury yields and thereby prompt some more dollar selling, especially against the yen, which has been attracting flows as a safe haven due to the latest banking crisis. Also, the latest Shunto negotiations in Japan concluded with companies coming to agreement with unions to raise wages by the most in about 3 decades, which may have increased the chances for the Bank of Japan to remove further accommodation in the coming months. So, a divergence in monetary policy expectations between the Fed and the Bank of Japan could result in a lower dollar yen. Perhaps the pair could soon fall below the round number of 130 and aim for the low of January 16th at 127.20.
Haralambos, thanks so much. This was a Forex Preview. Thanks for joining us at xam.com.